Some of the safest companies are low with debt. With John. So John, here's the question. Is a company with high debt more risky, or can debt actually make it stronger? Let
Yeah,
us know.
so there's at least two frameworks to evaluate this. One thing that a lot of people get wrong, at least like in the public sphere, anyways, for example, is with total amount of debt, whereas you want to think of debt as in relation to other capital. So, for example, if a company's worth, and this is going to sound really obvious when I say it, but um, for example, if a company's worth $1 billion and they have $1 million in debt, well, that's only 0.1% of their total. Sorry, suppose they make $1 billion in revenue, anyways. Yeah, that's only 0.1% of the revenue, right? So it's probably not a big deal. Whereas if another company, say, makes $2 million a year and they have $500,000 in debt, less total debt, but it's 25% of the revenue, right? And that's a much bigger problem. So usually what you would use is something like debt to EBIT ratios to actually evaluate how safe is a stock for its debt level, right? So EBIT is basically it's earnings before interest and tax. You would want to do that before tax because debt is also typically has a tax shield associated with it. I suppose preferably even you take EBT, but that's not like always a traditional measure that appears directly on the company's financial statements. So EBIT's more common, but EBT is pretty easy to calculate anyways once you have EBIT. Then the other framework to use, though, is just generally the Modigliani-Miller assumptions, which basically just say, there is a trade-off between equity and debt financing, and you typically don't want to do all equity financing, and that includes, and in equity financing, by the way, usually include internal cash. And the reason for that is that those forms of capital are more expensive than debt. And I won't really explain that why here because we don't have time, but the idea is that there's an optimal debt level that you can cross and have problems with, and also if you need to go below that, then your company's not necessarily as profitable as it could be.
Amazing. Subscribe.